Well, welcome to this virtual business card, which we are recording as part of a partnership between STAK and PCD Club. These virtual business cards will aim to give members of each community the opportunity to understand more about its members, where the opportunities lie, and the reason for their involvement in this community. So I'm delighted to welcome today Gareth Davies, who's a founder of Manor Ventures. Welcome, Gareth.
Thanks, David.
So nice to talk to you today. It would be great to hear, before we get into our discussion, a little bit more about your background in the company.
So my background is I worked at PricewaterhouseCoopers originally. So I'm a chartered accountant by profession. I worked up the ranks there in their advisory practice. And during that time, we were working in the sort of business recovery services where we were selling businesses out of administration to ultra high net worth and private equity investors. And it was during that time that one of those investors approached me and said, look, would you like to work on the buy side? Would you like to work within sort of the family office? And that kind of piqued my interest, and I moved out of PwC at that point. And then from there, really, I've worked with a select number of either ultra high net worth or small family offices until I sort of set up Manor Ventures to work across multiple clients versus just one family. As you know, working with these families, there's often other advisors involved. So in this particular case, there was the trustees in Jersey, there was a private bank in London, and you had the NextGen and obviously the matriarch of the family where the wealth was coming from. So there's obviously these sort of situations where it's quite difficult for the incumbent advisors to say no to the next generation who have a particular objective within what they're doing with their investment portfolio. So in this particular case, this guy was making a lot of investments, sort of shaking hands on a lot of deals where he was based, and that was causing a little bit of nervousness with the trustees and with the bank. And so I was sort of piloted in, if you like, to sit next to this next gen. And I think what was really beneficial about that is I could actually sit to him almost like a peer-to-peer relationship, where initially it was quite difficult because I'd never met the guy, but within time you become a very sort of trusted advisor to him. And what my job really is, rather than just to say no to the investments that he wanted to make, was to mentor, educate, look at his process, look at what he's trying to achieve with his investment portfolio within the direct investment space, and try to the best of our ability to de-risk those investments. And that's gone really well. And it was brilliant because recently he sort of quoted to say that I was one of the 3 people he trusts most in the world, which is quite an accolade given that I've only been working with him for a couple of years. But
so you kind of mentored him on the opportunities to look for and understand the characteristics of a deal that might be attractive within the boundary of what he's wanting to do and within the family structure.
Exactly. Yeah. So he'd come to me with a deal, we would review that investment deck together, and then I could sit on management calls with him. And it started off very much that I would be asking the majority of the questions. We'd obviously, through my background, we can do all the financial modelling and the sensitivity analysis, and we can kind of frame that investments in terms of risk and return for him, and then provide that information to him with the view that he then effectively makes the investment decision, but with a lot more information that he would have potentially had in the past. So actually what happens is he might be very sort of gung-ho about a particular deal, and then we do the work together. I provide that information to him, and after that it's about him telling to me and saying, do you know what, actually based on that additional information, based on the management call, based on the sensitivity analysis we've done and the further due diligence we've done, I don't think that's actually a very good idea anymore. And it's really that is the critical bit, the difference between someone like me and someone sort of like a trustee or a private bank who may not have those resources to collate that information, and it sort of takes that, we just have to say no to this, out of their hands to actually the client himself, assessing that opportunity much more coherently.
But it helps the family relations and it helps the other professionals do their job and keep everything on the road, I guess, having you by his side.
That's what we found. We found that definitely that I think it's been really beneficial for the private bank, it's been really beneficial for the trustees, and ultimately, just from that one family, I ended up being engaged, by the mother, by the, the uncle, by the uncle's daughter in New York, uncle's nephew in Dubai. We went through the family quite quickly because I think they all saw the value in actually having someone independent that could actually spend a little bit more time on these kind of bits and pieces that kind of fall out of the realm of what the private bank or the trust are doing.
I mean, sounds very global. I mean, are there certain regions you've done more work with?
I think it's all started within sort of Saudi region, but it's kind of progressing through there to kind of America. And I have an ex sort of F1 racing driver client now who's got a new enterprise. And so the other bit that we can do is a kind of interim CFO type work as well as just the straight diligence on new investments. So yeah,
And on the NextGen front, it's a term that's bandied around. Do you think that there are certain characteristics of the next generation of people coming through families, or is it too broad a category to really have much real meaning?
So in terms of their focus, it's very much on the deal by deal, because I think in the past you've had situations where large amounts of capital have gone into blind pools of capital where there's no kind of veto on investment by investment. And those are often flawed in terms of suboptimal exits because of timings of the fund, whatever. And I think now what we're looking at is the next generation are looking to go into sort of deal by deal because they want veto over every investment. And I think there's a lot more community, I think, with technology, and there's WhatsApp groups, there's Telegram groups. They all know about what each other are investing in within that kind of next gen private family space. And so they all don't want to miss out on those deals. And they like, I think, going directly because it allows them to have that kind of sense of achievement. And one of the things, just to touch on that for a moment, is what I'm finding is that speaking to the next gen, they often go to these investment committee meetings or the annual report meeting with the bank, and yes, they've made X million more per year, but actually for them, that wealth wasn't created by them. It's not really being managed by them. So the sense of achievement or purpose is not really there, and I think that's why there is such an appetite to get into direct deal investing, and because I think they prefer to take a smaller amount of capital and actually positively invest that in a company that returns to the family and think, actually, I can stand outside of the family shadow and be, this is what I did, this is what I achieved, even if that is effectively immaterial to the entire wealth of the family. But it's very important to them, and I think that's why I often get the business that I'm getting at the moment.
Okay, very interesting. And what is it that you offer the STAK community? What is it that you think you can help members with?
So I think what I love about STAK, and I think I've known Aidan, the founder, for some time, and I think being a small business, I think one of the most difficult things is you're doing everything from business development to the delivery of the actual the work. And in the sort of financial world, I think we all know there's a lot of sort of charlatans that exist between what I describe somebody that can pull the trigger on a deal and somebody that has an underlying deal. That people sit in the middle, try to make a living one way or the other. And I think when you've got limited, we've all got limited resource of time. For me, the digital aspect of STAK and the fact that it's these people that have gone to the STAK community have been vetted in some way, that that if you're dealing with people through that exchange, that the underlying parties have been independently verified and they are very close to the deal or to the capital that's making the deal. And that for me is invaluable because it just saves so much time.
Okay, and have you seen specific opportunities on the platform that have caught your eye? What do you think of the deal flow that's there? It's starting to develop.
It really is. I think it's growing exponentially, and it's the openness that's circulated, I think, is fantastic. Not all relevant to me, but I think the great way that the community is growing is I will often see deals on there and I think, oh, that's something that I know of somebody who I could verify would be good at delivering on that particular opportunity. And so you then introduce that person into the STAK, and I've introduced a number of people into the STAK now, and actually it's getting to the point where I'm being contacted by people saying, well, I've noticed on LinkedIn that you're part of this community, I've heard about it through someone else, what's it all about? And I think when you're getting that level of engagement from the outside community, it's clearly a really positive thing for the exchange. And then personally, there are deals that are relevant for me, and so far I've done one, and it was just so seamless because actually the client was previously being serviced by Big Four accountants. They weren't happy with the level of service they're being provided with, and not only could I find them, but they can find me through that. And I think what's been really good is I had one conversation with the CEO of that business. And you immediately talk on a level where he's like, okay, great, this is someone that can go beyond the sort of confines of a massive four. They're perfectly trained just as every other people within the big four, but they've got a little more real world experience. And that's allowed me to be more flexible in the way I structure the engagement. And it's now started. And so I won that engagement purely through STAK, which has been brilliant. And we're in the process of delivering the first piece of work. And that's with a very large family, with the view to that could expand into other work in time. So it's been brilliant, and I'm looking forward to seeing more opportunities come on that exchange.
And I mean, what do you think of the opportunity for it to bridge the family office sector, or bridge professionals between, the tax and legal world, the fiduciary world, the family office space? It's notoriously difficult in terms of working with families who value privacy, and those working within single family offices, say, don't want to be hounded by people trying to sell services. Do you think there's something in the STAK platform with the digital element of it that helps people procure services, but in an efficient way, without having to be unduly hounded by professionals who they need the services, and this is a way to engage with them? What do you think of the digital mechanism for engaging in that?
I think that's really interesting, because if I can just come back for a second, is that when I initially got started in this sort of world of family office and private wealth, I remember having a conversation with a mentor, and he was saying, once you're in a position where people are effectively trying to sell to a family, and that family are coming to you for your advice on what to do in that situation, it's an incredibly privileged position. And I think there's so many other people that, once put in that position, see that as an opportunity to then sell into the family. And I think from day one, I've been very, very firm on not doing that, and making sure that anything that comes to the family, you're always on that side of it, on basically, I guess, the buy side versus the sell side. And I think for the very reason, the moment you use that position to sell into the family, you lose all credibility of being that kind of trusted, impartial advisor, which is so valuable. And I think the great thing about STAK is that, I guess, there is a degree of anonymity within that digital exchange, and families can come on and can see, effectively vetted professionals across the whole spectrum of what you were mentioning. And I think that's hugely valuable to the families, to have access to that level of those levels of individuals, not just the sort of branded big firms, but independents or people that have been recommended, because ultimately the best kind of provider is someone that's been recommended to you and by another family, for instance, that's worked with them successfully. And for me, that's my biggest source of business, is referrals.
And the marketplace is very global as well, isn't it, I guess? So the fact it's a digital exchange means that you can't always be at that conference, although it's nice to attend in-person conferences. The fact that it's there online with no geographical boundaries, I guess, also is, I think, during these last 2 years, we've all learned to be a bit more digital. So I suppose it plays to those themes.
Absolutely,
as well.
Absolutely. I think, especially talking from my own perspective of being a relatively small business, is that sometimes it's quite time intensive to go to all these conferences or events, and you don't really know when you're there how effective that's going to be for your personal business. But to do it's all on a digital exchange where you can kind of see all the providers, you can see the opportunities. It does make for such a more efficient way of, for me, kind of attacking that market, if you like.
Okay. And finally, when you're seeing now investment opportunities coming across your desk, you're working with clients on a whole range of sectors. Are there certain sectors of the economy that you find particularly exciting at the moment? Are there areas that you see real potential for growth? And also, where do you see risk areas? When you're looking at analysing deals at the moment, what is it that makes you feel optimistic?
Well, it's really interesting because at the moment the deals are very family-led. So what tends to happen is the deals come into the family. So it's about that individual family or NextGen, what they're particularly interested in. So we've had, we deal with a whole range of deals, from kind of some of these new NFT type exchanges to rocket launch companies that are putting satellites into space to med tech. There's a whole spectrum. I think that's one of the things that I like about the job, is that we're obviously reacting to what the families are looking at, and all of them have different sectors that they're potentially interested in, and so then we obviously respond to that. So yeah, I think sort of health tech industry is quite interesting at the moment.
Does ESG and sustainable investing also, is that a big feature of what, or is that just something that is media, overblown media to say that NextGen are interested in ESG and sustainable, or is that something that you see cuts through in some of these private deals?
I think we definitely see that, yeah. 100%. I think the next generation are so much more focused on their impact, the impact on the world, and I think they want to bring that to fruition, I think, through the deployment of capital within the ESG space. I think within the ESG space, the hard thing for what we do is actually finding what is genuinely impact versus what is effectively, this term sort of greenwashing. I think that's the tricky bit in the space, is to find those underlying companies that are truly making an impact into what they're trying to do. Because I think it's become one of these things where the larger firms or bigger companies are trying to reverse engineer into that space because it's become such a sort of fashionable area of the market. So I think we definitely are seeing that. Definitely got clients that have come and said, look, can you find deals within this space? So yeah, I think it is really interesting.
And do you think then the SME sector is actually a great place to find those kind of deals? Because you say the larger companies with very complex supply chains trying to re-engineer this, that's where I guess there's some of these companies, the smaller companies that you're looking to back, can really do something different, can't they, in the sustainable or ESG space?
I think what we found is that the early stage for these NextGen, it does carry a lot more risk. So what we try and do as one of our initial inputs is to try and move them slightly up the growth curve and look more at kind of growth capital versus the sort of seed capital, if you like. And that's proved very effective, where they're investing alongside reputable family offices. They may be using intermediaries that have demonstrable track records within that industry. With those intermediaries would have done commercial, financial, exit due diligence that we can also rely on as an added security for these kind of investments. So that's quite important as well, is having that kind of trade-off between looking at those kind of impactful businesses that will tend to be younger if they're going to make a true difference, versus the older ones that are trying to reverse engineer into that space, versus that kind of risk-reward trade-off on the growth curve.
And what's your view on investing in UK companies? Do we have a healthy scene in many different sectors that attracts overseas investment? I mean, there's a lot of US money coming in private equity into the UK, deals being done, businesses being snapped up. Is this something that you see? Do you think the UK is still a great place to invest in a number of these sectors?
I think it's really coming along, definitely. I think, with all these kind of innovation hubs and various kind of labs that are coming to fruition, we are seeing a lot of deal flow that's coming out of there, and we also see a lot of them focused completely on the impact space. There's a company called Conduit Capital, Conduit Connect, which also just focuses on these kind of impact deals, which is very interesting. So I think there is a huge amount of deal flow within the UK. We're still, I wouldn't say it's dominating kind of the deals that are being done. They are being done globally, a lot within America through the clients that I work with. But there's definitely, we still see a lot of deal flow within the UK.
Terrific. Well, look, thanks for talking to me today, Gareth, and we look forward to sharing this with our members.
It's a pleasure.